This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. crude oil inventories unexpectedly fell sharply last week as exports jumped, while gasoline stockpiles decreased less than forecast, the Energy Information Administration, EIA, said on Wednesday. Crude stocks slumped by 6.4 million barrels to 453.6 million barrels in the week ended April 19. The EIA said, compared with analysts' expectations in a Reuters poll for an 825,000-barrel rise. Crude oil inventories fell following the largest weekly rise this year in exports of 453,000 barrels per day to 5.18 million. Net U.S. crude imports fell by 417,000 barrels of oil per day, the EIA said.
Russia's liquefied natural gas, LNG, exports could stagnate in the next 4 years under the two less rosy of three economy ministry scenarios, a sign that Western sanctions might be cramping Moscow's energy plans. Under the ministry's conservative and stress scenarios, the latter not made public, LNG output would stagnate at 38.6 million metric tons each year in 2025 to 2027, according to a document seen by Reuters. The baseline scenario, the most optimistic, calls for a rise to 56.6 million tons in 2027 from 33.3 million in 2023. Russia says it wants to secure 20% of the global LNG market by 2030 to 2035, compared to around 8% at present, thanks to new plants predominantly located in the Arctic.
Moving on to the top news in the energy sector.
A spring surge in U.S. gasoline prices is set to fizzle out earlier than expected as geopolitical concerns abate, raising optimism that motorists will find some relief at the pump ahead of peak summer travel demand. U.S. gasoline prices are under a microscope ahead of the country's presidential elections in November, with stickiness in inflation among top issues plaguing consumers and policymakers. After Russia's invasion of Ukraine led to record-breaking prices at the pumps in summer 2022, worsening tensions in the Middle East and Ukrainian drone strikes on Russian refineries had some analysts fearing a repeat this year.
Oil prices steadied on Thursday after settling lower in the previous day, as signs of retreating fuel demand in the U.S., the world's biggest oil user, contended with widening conflict risks in the key Middle East producing region. Brent crude futures inched up 18 cents, or 0.2%, to $88.20 a barrel at 0630 GMT, while U.S. West Texas Intermediate crude futures gained 13 cents, or 0.2%, to $82.94 a barrel. Data from the U.S. Energy Information Administration on Wednesday showed that gasoline stockpiles fell less than forecast while distillate stockpiles rose against expectations of a decline, reflecting signs of slowing demand. Next, we have the top news in metal markets. Global refined lead and zinc markets are likely to see a surplus in 2024, the International Lead and Zinc Study Group said on Wednesday. The global refined zinc market will see a surplus of 56,000 metric tons in 2024 compared with a previous forecast of 367,000 tons. Prices for zinc, used to galvanize steel for the construction and auto sectors, are up 5% so far this year. Global demand for refined zinc metal is forecast to rise by 1.8% to 13.96 million tons in 2024.
Copper prices edged higher on Thursday, as the metals market saw an extended inflow of money through investment funds, while a forecast of potential deficit in the refined copper market this year also lent support. 3-month copper on the London Metal Exchange was up 0.9% at $9,862 per metric ton, as of 0725 GMT, while the most traded June copper contract on the Shanghai Futures Exchange closed up 1.9% at 80,160 yuan, $11,061.13 a ton. Fund buying was still relentless during the U.S. session, and after a slightly weaker opening, Asian funds seemed to be follow through too on this wave of buying, said a trader.
We will now look at the top news in the agricultural sector.
India has agreed to allow oil marketing companies to procure ethanol by diverting an extra 800,000 metric tons of sugar for biofuel production, a government source said on Wednesday. Concerns over sugar production due to below normal monsoon rains between June and September had led the world's second largest to cap the amount that could be diverted for ethanol in the current season to end September at 1.7 million metric tons. But as the supply situation has improved as a result of unseasonal rainfall in Maharashtra and Karnataka, the government has agreed to the diversion of an additional 800,000 tons of sugar for ethanol production, said the senior industry official.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.